It's about that time of day again. My name is Joseph. Monday evening, April 30th. Welcome back to your nightly newsletter. My plan this evening is to identify the most reliable trading opportunities setting up for tomorrow's Tuesday's trading session. And I'm covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening with crude oil, oil is bearish and trying to collapse back off the highs of a long-term trading range. And my plan is to look for selling opportunities with buyer failures up at the moving average tomorrow morning. The S&P is also bearish, this time with a spike in channel pattern. That tells me the most reliable selling opportunities on the Emini will come up above that channel high tomorrow morning. Nasdaq also bearish, this time with a bear flag, and trying to finish a big measured move target back down to monthly lows tomorrow. My plan is to look for selling opportunities using a fake-out-breakout-pullback pattern on the way lower. Gold is also bearish on its way down to channel lows, and I have my eye on a key resistance trend line for selling opportunities tomorrow morning. The euro is bearish as well with a big spike in range pattern, and that tells me to focus on failures for selling opportunities up above that range high tomorrow morning. Boy, speaking of tomorrow morning, we have a brand new month right around the corner. Kind of a weird start to the week, right? End of the month, at the beginning of the new week, but we're ready to go into the month of May tomorrow morning. And of course, no better way to get ready for a brand new month than a great newsletter for you guys and gals tonight. We're going to cover all of our favorite markets. I got some great opportunities setting up for Tuesday. But before I jump into the charts tonight, I need to remind you, if you're watching on YouTube this evening, you can find a detailed description of this entire trading strategy written out on my blog at sidewaysmarkets.com. I'll put the link in the description of this video. Also, if you have any questions about anything covered in this video, please remember to post them in the comment section below. And if you like what you see tonight, please help support this channel by subscribing and make sure you hit the bell icon so you get notified every time I post another video. And if you really want to stay in tune with what's going on here at School of Trade, head over to sidewaysmarkets.com. This is our trading blog where all the action happens every day, and make sure you join our mailing list in the upper left-hand corner. Give me your name and your email address, and I'll send you an email anytime I publish something new. And don't forget, while you're here, make sure you follow me on social. Lower left-hand corner, I'm always posting exclusive content, charts, links, interesting videos I think you guys might enjoy on my social media channels. You won't find that anywhere on my blog. So if you're interested, if you're on social, follow me on Stock Twitch, Twitter, Facebook, LinkedIn, whatever your favorite flavor of choice for all those weekly updates. Also, don't forget all the charts from tonight's video. You can download those charts by following this link right below the video tonight on the blog. And don't forget your free pass in the upper right-hand corner. If you're not a member here at School of Trade and you'd like to get a free pass, come out and test drive our trade room, grab that free pass in the upper right-hand corner, and I'll see you there tomorrow as a guest. And don't forget, if you have any questions, I would encourage you to post those questions in the comment section below the video. And don't forget, I'm always here standing by to help you guys out. I've got live support tools on the right-hand side of my website. They're always available for you guys to reach out and ask questions. All right, great to be back with you guys and gals this morning. Hope you had a great weekend. I had a fantastic weekend, beautiful weekend here in Los Angeles, but we're back to the grind here this morning. Look at a big week ahead of us here too. So let's roll up our sleeves and let's get this party rolling here. Tomorrow's Tuesday, May the 1st, and anytime I have the first day of the month, I start looking later in the week, and the first Friday of the month means we have non-farm Friday. And this probably isn't going to mean much for us tomorrow, but as we get later on in the week, Thursday and Friday, you're going to start seeing all eyes shift to that Friday morning news report. So we'll talk more about that as we go into the end of the week. We can also see tomorrow. Tomorrow's the beginning of the FOMC meeting. There's a two-day meeting that happens 8 times a year. We're going to hear from the FOMC not tomorrow, but we'll hear from them late in the day on Wednesday with their big FOMC announcement. Now, this shouldn't have much of an impact for you tomorrow, but we'll talk more about that in tomorrow night's newsletter as we plan for Wednesday's trading session, because it definitely will be a big impactor, right, for Wednesday's trading session. In addition to that, we have, of course, being the first day of the month. Now, remember, as we talk about, right, towards the end of the day, towards the end of the week, and towards the end of the month, we start seeing greater volatility. Traders just instinctively feel like it's okay to take more risk towards the end of the day, end of the week, and end of the month. At the end of the month, a lot of traders close out positions to increase their performance for that month, right? No better way to get some fussy client off your back, right, than to show them a nice good percentage gain for that month. But a lot of times, though, that puts them in a position where they're unable to capitalize on new opportunities coming for the following month. So what do? They initiate new positions, right, on the first and second day of the following month. You can expect to see increased volatility as traders get out of positions from today and, of course, into positions, right, into the new month of May. So expect to see that increase of volatility. And then, of course, as we get our hands dirty on tomorrow's session, right, we can see that all we really have tomorrow is this ISM manufacturing index. Now, anytime you see the letters ISM, right, at 10 o'clock, you need to pay attention. These are big potential market moving events. And tomorrow, and again, really any major news event combined with 10 a.m., I call the 10 o'clock shock for a reason, because we oftentimes get that shock to the system. We saw it happen today across most of our markets. So tomorrow you can expect to see more of that tomorrow as well, around 10 a.m. Eastern time. And of course, as always, I'm going to go over all the charts for tonight, right, prepping for tomorrow's session. Don't forget, our trade room opens up at 8 o'clock Eastern time with all of our advanced members. I look forward to seeing you there right alongside me, and we'll execute tonight's plan right together. Speaking of tomorrow's plan here, let's jump into some charts now. Got a lot to cover here. We'll start off tonight on oil, then move over to the E-minis, S&P and Nasdaq, and then over to the metals. We'll talk about gold, and then we'll wrap up on the euro. Crude oil starting off tonight. Oil is bearish after a strong two-legged move back off the highs. And my goal is to look for buyer failures up above this moving average and into that battle zone for selling opportunities going back down to the original range we started in earlier today. Now, let's be honest. It's easy to see the bulls look pretty strong moving higher on this chart. In fact, we found some great long opportunities right on the CL in our trade room today. And I'm tempted to call this market a bull market. But a quick look at the 30-minute chart. Yeah, this is the same chart we talked about from last week's newsletter. And you can see we're still rotating back and forth right inside this trading range. Will the bulls go back and retest the high of this strong move higher? I don't think anybody knows 100% for sure. But what I do know for sure is this big trading range on the chart. And I'm not going to be the person who tries to buy the highs on the pullback. So I'm going to wait for buyers to prove me wrong, and I'll go from there. So kind of a transitional point here on the crude. It's very, very easy to see. The day began this morning with a strong move down, right, in a bear spike and channel. Sellers found selling opportunities off the high of that range. From there, the buyers got a strength pullback strength and took the market higher. In our trading this morning, we found a hidden channel, right, and looked for buying opportunities coming off of that hidden channel, right? It was a pretty easy pattern, right, to see and use. Then, obviously, that thing runs higher. Now, what is always kind of laughable is the news media says, right, oh, look, right, there's news about the Iranians building a secret nuclear weapon program, right? That caused the market to run higher. But in all reality, we're sitting our trading this morning going, that's not what caused the market to go higher. We get a big pendulum swing below the range and back up above the range. I would say that was telling us well ahead, right, of any headlines we saw this morning in the newspaper. Always makes me laugh when the most popular news websites try to tell us that one specific thing, right, led to the market going higher, right? Some politician said something stupid, right? Some natural disaster happened, whatever. When in all reality, we've been looking at this same chart now for weeks, and it's pretty easy to see we had a nice strong move below the range. You know how I roll. Find the size of that move down, right? Project it back to the move up, right? And I wasn't exactly correct on the overshoot, but that looks pretty convincing up there, right? We'll call it even on that. So whether you want to believe all the pundits you see on the television set or whether you trust the chart, I'm going to lean on the chart. The chart has continued, right, to make it easier for me to find great trading opportunities a lot better than watching the news media. So if you look at the chart right now, you can see we had a 1 try, 2 try down, and then back up in. We talked about this last week quite a bit on our newsletter, and now here we have one big move up. I'm expecting to see the buyers try one more time, and if they're successful, sure, we'll call this a bull market. But if they're unsuccessful, we've got a great selling opportunity going back down to retest that low. I'm not going to try to predict, right, where we go higher. I'm going to make sure, right, I look for those buyers to fail. And if I'm wrong, right, the worst case scenario is I missed an opportunity to go back and retest that high. I can always look for more, right, as the day develops tomorrow. So here we are right now. Strong move up, right? Again, for whatever reason you want to blame it on, right, the bulls had a nice strong move up, right? Here we have now, right, the highs of that big trading range up here. And what do you see? A strong pullback off the high. We bounce off the moving average and a strong move lower. I have to be honest, if it wasn't this strong to the downside, I wouldn't even think about looking for a short on this. But because we saw such a knee-jerk reaction off the high, followed by a second leg lower, it definitely gives me the ability now to combine that with that larger, right, with that larger range in the 30-minute chart and start to plan an opportunity to get short. Now, what I'd like to do here is I'd like to see these buyers try again. I'd like to see them go up, try, right, again to buy that pullback. And again, maybe I'm wrong, right? Maybe they succeed. Maybe they run all the way back up and it never stops, right? But the reality is we don't have that much information now. All we really know for sure is the top of that big range up here. And like I said earlier, I don't want to be the one that buys that. So what I want to see is I'm looking for a couple different patterns here. The best pattern really would be a buyer failure pattern. That'd be up, pull back, buyers try to buy the pullback. We now know where their stops are. Their stops get run. What happens? Now everybody jumps on board, right? Buyers become sellers, sellers become sellers because everyone's looking for that collapse back down. But don't chase the move lower, right? Don't chase that move lower. Make sure you wait for it to pull back and look for that sell, right, off the moving average. So really there are two individual patterns I'm looking for. One is a buyer failure. The second is going to be a seller strength into a pullback. The key is strength into that pullback. Now, buyer failures, strength in the pullbacks. I'm going to go over a lot of this terminology tonight that you may not be aware of. So to make it easier for me to kind of give you all the information you need, we don't have that much time to do that on this video newsletter, but here's what I'll do for you. In the upper right-hand corner, I'm going to give you a free trading class that will go over all the terminology, all the entry patterns, everything I'm talking about in a much deeper dive. That way I can get all this information relayed to you, right, without having to slow down, right, on this nightly newsletter because we had a lot to cover here tonight. So in the upper right-hand corner, right, grab the information window that pops up, right, and register for that free class. I'll send you an email, right, with a link to a video that'll walk you through all the different pieces of my trading strategy, all the terminology, all the stuff you're going to need to really get the most out of this, right, out of this newsletter. So that's the plan. I want to go up, failure, strength, pullback, and whoops-a-daisy, right back down. Now, what if we were just to collapse lower, right? What if the markets, that's if price goes higher. What if we were just to collapse lower? What if we trap high, right, and collapse lower? Well, that's relatively easy. Now what I'll do is I'll go out and look for a hidden channel. So if we do get a little short-term little trap high in the overnight session, which is I want to say it's likely, but it's definitely possible. I'm expecting the buyers to get a little bit more umph going higher, but I'm looking for the failure back down, like I mentioned earlier. If we just roll over, now's my chance now to grab this as a new channel, right? Kind of a hidden channel there. Draw on those two lows, bring it up to that high, and then let's go up and let's try to sell, right, up off that high, right? I'm going to try to sell up off of that high. Now to do that, maybe a pullback pattern, maybe a trap high pattern, maybe a buyer failure pattern. Again, check out that free class in the upper right hand corner up there, and you'll learn more about the individual patterns I can use at that level of resistance. Now if we do end up going lower here in the short term, where's my target? Well, the initial juicy target is definitely this initial trading range, but I would assume if we head lower, we're going to make our way back to that 67.17. Just remember though, as the market turns bearish, do not chase after it and sell low. Make sure you sell up at resistance as it goes. Now, what would it take to get me back on board here to be a buyer? Right? How would I be a buyer? It's difficult to do that because as I look at this, I've got a key level of resistance overhead in this measured move at 69 even. So even if we do get a nice move higher here, you can easily see they responded to it earlier. So it's difficult to justify being a buyer even if I do see a nice strong move. And then if we do see it get through that measured move, well, then I'm up at the high of that range now. I don't want to buy into the high of that range. So these are definitely attractive buy patterns, but again, when you put them in context, they really just don't work. I don't want to buy into the measured move. If I get above the measured move, I don't want to buy into the high. So really, I wouldn't be shocked at all if we see a strong move back up, bounce off the high here, and then we see the failure, right, in strength to pull back down again. I won't be surprised at all tomorrow if we see that, right? That may happen shortly after 9 o'clock, right? So keep it in mind after the opening bell on crude. For me to really feel confident, I'm going to want to see this market really run higher, right? If everybody's really scared about this Iranian secret nuclear weapon deal going on right now, right? If that really is what everyone's worried about, and it's not just this trading range we talked about last week, by the way, right? Then it will keep going higher, right? And of course, I'll be a fool for not listening to the news. Said nobody, right? What I'll do at that point now is I'll grab a new channel. I'll mark up that new channel and I'll wait for the pullback right back down off of that low. So basically it'll look something like this, right? You'll run up. It'll be so strong. It'll be so obvious. You'll go, whoa. That guy JJ's a real bozo, man. He should have listened to CN, whatever, right? But that's okay. Again, like I mentioned earlier, I'm not going to be the one to buy into that high. What I'll do is I'll wait for it now, and I'll look for that pullback, and I'll buy it at a much lower price later on in the session, right? Because trust me, anything that goes up on fear-mongering news usually always gives you a sharp pullback. So we'll tackle that tomorrow, right, once we get there. So watch for those buyers as they go higher here to start showing signs of failure, and then we can look for that move going back down. And if I'm completely wrong, hey, you know what? All I miss out on is this small, really, it's this move here and that move here. I could think of much bigger things to miss out on, right, in my trading career, so I'm not going to worry too much about it. Now, that takes care of up, down, right, and sideways here tomorrow morning, 8 o'clock Eastern time. We're going to see what we get, and we'll trade our plan. Let's keep going. How about some S&P? Now, S&P's pretty straightforward. We're obviously bearish with a spike in channel pattern. That tells me to look for selling opportunities up at the highs of the range, or even better, up above the range using, right, buyer failures, right, at the moving average. That would really be, right, where I want to be selling tomorrow. If price continues to sink lower, we know the measured move is most likely the target. So I'm assuming a strong run lower below that channel, right, my plan will then be be more aggressive, looking for traps above prior swings. So, this is always kind of one of those easy charts where you can obviously see, right? Day starts off bearish. We had lower, right? Pulls back, runs lower. I'm connecting those two lows. This is the type of channel you'd be looking for tomorrow on oil. If the market tumbles lower, I then connect up to those highs, and that creates a level of resistance. When the market is bearish, we look for levels of resistance to then combine with our patterns. So we have a great level of resistance. And by the way, if we continue to go lower, I will continue to adjust that channel down, right? We'll talk more about that in a moment. But that's the bottom line. Bear market runs, new lower low, connect those lows up to that high. I want to sell up off of that high, right? With, again, it's going to be either a trap pattern or a buyer failure, right? Or a strength in a pullback, right? Strength in a pullback pattern, which by far is one of my favorites, right? Now, again, you want to learn those patterns. Grab that free class in the upper right-hand corner. It's okay. I'll pause the video for you. Pause the video, grab that free class, get that registered. That way you get that email in your inbox. You can learn all the terminology, learn all the things that we use every day in our trade room so you can make the most out of this nightly newsletter. So what's our plan? We want to sell at resistance. If price goes up, I'm looking for a possible trap high into buyer failure into seller strength into, of course, a seller pullback, right? Trap high pattern, buyer failure, seller strength, right? And of course, a target down at that measured move. What if the market goes sideways? You're going to see in a moment in the Nasdaq, if the Nasdaq's going sideways right now, right? What if we end up, back, and then double bottom? Anytime we see a double bottom in a bear market, we know to look at the middle of that double bottom, right? That creates our trading range. And then what? I'll use the 2-try rule. 1 try, 2 try, 2 tries above the range, sellers coming in and selling back down into that range. This is a little trick we call the 2-try rule. Again, where can you learn more about that? In that free class in the upper right-hand corner. So that's my plan if we go sideways tomorrow, right? What if we keep going lower here? Well, it really all depends on how it goes lower. A lot of times what will happen is when a market does this, it will kind of bounce off of that channel low, right? It's not rotating back to the high, but it's also not collapsing down. If we do, same thing stays in play, right? If we do hold this channel low, now my goal is keep selling up at that channel high, right? Relatively easy. The patterns are the same. Traps, buyer failures above the moving average, right? Strength into seller pullbacks, right? Pretty easy there. Now, the only other condition would be, let's just say, for example, that we get a stronger move down, right? Let's just say, for example, here, that we end up going even steeper, right? So overnight, the market now runs down to that measured move, right? Well, now we have the up, down, sorry, let's get that back here, down, up, down, right? Grab that low, off that high, and now we know where we're looking to sell from there, right? So again, right now, all we really know right now is very strong bear trend. I want to sell high at resistance. I'm marking up these levels of support so I can copy and paste it up top. You'll notice how it really fits nice at the top there, nice wick, and that'll give me a chance here to use that level as resistance, right, in tomorrow's session. But if we collapse going back through that low, find that additional channel a little bit steeper now and focus on selling off of that high. How do we turn bullish? Yeah, how do we turn bullish? There's always potential for the reversal, right? I don't like to predict reversals. I wait for 3 things. First, I wait for a strong move higher. Second, I wait for a pullback to the moving average. This is where buyers should react on strength. Third is strength going higher. See, this is a little bit of what we're missing on oil. If oil had given me a full trend reversal off the highs, it'd be a slam dunk short. But because we haven't quite seen that strength, pullback strength on the oil chart going lower, of course, right? That's why I say I was tempted to call oil a bull market. If we do see this strong move higher on the S&P, we pull back, right? That strong move higher now should give those bulls the courage they need to buy the pullback if they really do want to reverse this thing. And then once we see that strong move higher is all about personality. Right? It's all about personality. And this is where working with someone who's got a lot of experience can really help. Because, just like everything, right? It's not what the market did, it's how it did it, right? Did it do it slowly? Did it move it quickly? Did it feel like it was never going to come back? That's the personality that's going to feel like when the market reverses. And so what you want to see is that real strong move higher. Once you get that strong move higher, then it's pretty easy from there. Just connect those highs, bring it up to those lows, right? Find that new channel. And usually this ends up being kind of a two-legged pullback, right, into a seller failure and go from there, right? So it ends up being kind of a two-legged pullback trap low into a seller failure, into a buyer pullback. I know it's a lot of terminology, and I can't go over all of it right now with you. I'll be here all night on this video, right? But again, grab that class in the upper right-hand corner, right? Little information icon there, right? Join the free class, learn the strategy, right? It'll change the way you look at trading. I can guarantee you that. So that's the plan there on the S&P. If it collapses lower, right? If it collapses lower, don't chase after it. Again, end of the month. Anything can happen here in tomorrow's session. Let's keep going. How about some Nasdaq? Now, the Nasdaq's not as obvious as we're obviously bearish, but the strategy has a little bit more moving pieces to it. The Nasdaq is bearish and trying to finish a measured move and a rotation down to the low of this channel. But this spike in range has me a bit concerned. This short-term trading range, you may also call it a bear flag as well, that tells me that selling low isn't going to be very reliable here. My goal is to sell up above this short-term trading range. But if price keeps pushing lower, I'm not going to sit here on my hands all day tomorrow. I'm going to look for an opportunity to use the low of that range as resistance, but we got to make sure we get a strong push down first. Now, looking at the chart here for tonight, it's pretty easy to see here. We've got that strong move down, the pullback, and they're at it again down to that measured move. That measured move just so happens to be right at that prior month low as well. So we know the bears have control. What we really don't know is this going to be the channel? We don't really have a lot of proof on that channel. All I really have, on that, is the fact that we have a trend line coming down off that high, right? I'm really using an educated guess as far as where that channel is, okay? We don't know that for sure. What I do know is that measured move will definitely be an easy target for the sellers at 68.25. What else do we know? We also can see a strong move down with some higher lows and some higher highs. Here's a situation where we have a bear market. That bear market, though, has higher lows and higher highs. Does that make it a bull market? You tell me. Does that look like a bull market to you? No, it's definitely not. This is called a bear flag. A bear flag pattern, which you'll also learn, as a matter of fact, inside that free trading class, right? You'll learn how we trade those and the patterns we use for those, right? A bear flag pattern is a tricky pattern. Because you have that rising support trend line, you don't want to go selling down below that channel. The best way to trade a flag pattern is either to trade it up above the top of that flag. As I mentioned earlier, I'd like to sell above this range, or get it down through the low of that flag and then come back and use the underbelly as a level of resistance. So those are the two key components to trading with a flag pattern. And again, once we get there, we'll know which entry pattern we can use. Remember, right now, I'm just giving you an idea of where I'm looking for the best entries for tomorrow. I'll still need to drill down, right, and find the precise entry trigger once we get there, and that's what you'll learn up in the upper right-hand corner inside of that free trading class. Now, with that said, right, you can also see a bit of a trading range here as well. Double bottoms, double tops, that's a trading range. Trading ranges also tell me, just as we talked about right earlier on today on crude oil, I want to go up to try and fail right back down again. So again, we know we have a trading range. I want to sell off of that high. The other way to sell will be to get the moving average below the low of that range at 12 3/4. And then I want to see the pullback. I like to look for what I call a two-legged fake out breakout pullback. And the reason why I call it a fake out breakout pullback is because it usually ends up doing this, usually ends up going above the moving average, failing to go back into the range, and then it ends up collapsing right back down in, right? Kind of a buyer failure above that moving average. Again, the key is getting that moving average down below the low of that range, so we can then use that range as a level of resistance on the way down. If the market just collapses down to that measured move, not to worry, you'll probably have some swings that occur on the way down. If that's the case, I'm going to keep an eye on this for a trap, and we'll look to sell high up at resistance, right, as the market collapses as it goes lower. So if the bottom falls out of this sucker and everything turns red tomorrow, right, I'm not going to chase after it because of where we are, right? We don't have enough information yet to know if we can expect much more than the low of that channel. My number one priority will be, though, as the market goes lower, is to sell at resistance. Whenever the market's bearish, we have to be disciplined to sell at resistance. That is, if we do respect the money, the cash in our trade account. So that's the plan there on the Nasdaq. But what if we go bullish? How do we turn bullish? Well, first of all, I'd like to get us back above that trend line. That's going to be a key component. Let's get the market above the trend line. Strong move up, pull back, hold the pullback. Remember, strength, pullback, strength. Find that new channel, and then I can look to buy off the low of that, right, of that hidden channel. Target at that point will be up at that 72, right, and a quarter, 72.5 area, right at the high of yesterday or last Friday's trading range. Okay, so that's the plan for bulls, the plan for the bears. At this point, though, there ain't no reason, right, to be doubting those bears, because you can definitely see this market is well in control of those bears. And again, right, you get some prior month levels here right around that 65, 68 area, so that measured move will likely be, right, a pretty tasty target. If this thing really falls apart, right, if it really falls apart, heads up, because you've got that big target all the way down at 64.28, right? If this thing really falls apart here tomorrow, we'll look for that larger channel coming down, and we'll look to sell off that high. So if this thing turns into a bloodbath tomorrow morning, which again, we got some big news at the tape today. We get beginning of the month tomorrow, and obviously Fed Day starting up this week. So we may get a chance for some pretty substantial moves here in the NQ. Obviously right now, all we know is that spike in range and that measured move. The rest we'll have to wait for tomorrow. How about some gold? The yellow metal is bearish and trying to finish rotation back down to the low of this channel we discussed in last week's newsletter. This is the same channel we talked about from last week. The market's definitely bearish, which means I'm looking for selling opportunities using resistance levels up overhead. And this trend line drawn off of the lows will make an excellent area of interest for resistance. But in all reality, I would like to sell anything above this moving average. I'd like any buyer failure back above that moving average. And if price continues pushing lower, I'm going to find a new short-term channel, and I'll just sell off the high of that channel on the way down to those major lows. Now, I think the best thing on this gold chart tonight is to take a step back and just remind you, we've been looking at this for quite some time now. This is not a new strategy here on gold, right? We had this strong move down. We drew this trend line off of that low up to the high, and here we are now back up to the high of that channel. We talked about this channel being an excellent place to sell in last time, right? Last Thursday night's newsletter, right? And now here we are back to the high of that channel, looking to make a sell back down again. Now, of course, we also have some measured moves in the chart. We got one leg down, two legs down. That third leg down is Coincidentally, right around that prior month low, end of the month this month, right? Not a surprise. We're finding our way back down to those prior month levels. So we definitely can tell where the sellers are getting in and where we think they're going to be getting out of this move. Now's my chance to put a plan together so I can profit, I can participate in this tomorrow morning. I know we have a strong move up, right, going higher here today, right? Very strong move higher, but look at the way the market reacted to the moving average. Does that look like a bull market to you? Doesn't look like a bull market to me, right? We should have seen the buyers holding pullbacks, right, if they were taking this trend seriously right now. So it looks to me like with a strong move down, right, off the overnight. That translated into, of course, a strong move into the U.S. morning session. The bears tried to sell off the high. In fact, I was looking for some selling opportunities this morning in our trade room, but nothing really came about, right, on the yellow metal, and it looks like we know why. They were looking to get back to the high of that channel. Then you've got your failure now into your strength, which means now I'm looking for, you guessed it, that pullback on the way back down. This trend line is a very important clue. Let's zoom in on that trend line a little bit here, and let's see if we can't put this together. The ideal scenario would be to use this support trend line as a level of resistance up here, then get the moving average coming over, let them fail at the moving average, into a strength, into a pullback, right, going back down in, right? So ideally, it's going to be a trap high into a buyer failure into a seller strength, right? Take your pick, whichever of those patterns, right, you like the most. And again, you're going to learn those patterns in the upper right-hand corner by grabbing that free trading class, right? So don't forget that before you finish up here today. So that's ultimately what I'm looking for. I'd like to go up, use that resistance trend line. That will definitely get the buyers thinking in the direction of buying that pullback. They try to buy the pullback. Maybe they're successful. Who knows, right? But the odds are not on their in their favor. The odds are we bounce. We know where their stops are now. Now sellers are selling at resistance. If we can stop out these buyers, now those buyers become sellers as well, because how do you get out of a long position? You sell your way out. That leads to seller strength. That seller strength, of course, will eventually dry up and wait for sellers to sell the retracement, and we look for that retracement back up at that moving average. That's an easy plan for tomorrow. In all reality, though, I really don't need it to use that trend line. What I really want is just a failure into a strength into a pullback, and I'll gladly take that. I just want to sell up around the top of this channel if at all possibility. Now, what if we don't get the bounce? What if this thing just tumbles lower here? Then what? Let's go now looking for a new channel here, right? We'll grab that low, find that high, and I'll go looking for a new channel if the market doesn't want to pull back for me, right? So find that hidden channel, draw the trend lines off those new lows, copy and paste at the high. And again, when a bear market, my number one priority is what? Find resistance, and then combine that resistance with an entry pattern. I'm giving you the levels of resistance to look for tomorrow. If you want more about the entry patterns, you'll learn the entry patterns in that free class in the upper right-hand corner. Now, the only real trouble we have here is if this thing just sinks, right? If it sinks down to the low without pulling back for us at all, we can expect to see a two-legged correction in another trench again. Right? So if this thing doesn't pull back, if we don't go lower and then pull back up here, if we just sink lower, right, that's way too much strength. We're not going to rotate all the way back up again. We'll probably end up two-legged pullback, right? Little failure and then back down again. So look for that second try, right, if it just sinks overnight. Right? Sometimes they do. Sometimes markets just, especially end of the month, we get FOMC coming up. It's gold for crying out loud, right? That wouldn't be the first time we saw gold go bananas, right? So it definitely could be a sink down lower as well. Could we reverse tomorrow as well? Absolutely we can reverse. That's always a possibility. We have a strong move up, right? If they can run through that high here, hell yeah, I want to be a buyer too, but I'm going to wait for the reversal. I'll wait for that new high, and I'm going to look in for the buy off of that low tomorrow. I want to see a real strong move higher, right? This thing's really got to kick some butt going higher here. Right? What I don't want to do is start buying as the market tries to go higher, because what's going to happen? Yeah, resistance up there that could easily, like on crude oil, right, fail and then collapse back down again. So be very careful. Don't get wrapped into the scalper's curse. Don't get caught trying to use fast time frames, right, because they give you more patterns. Use those slower time frames, right, because they give you the bigger picture. I would much rather trade fewer, more reliable patterns on a slightly slower chart time frame because I can see the big picture, right? I don't want to use some 100, 144, 200 tick chart because all I can see is what's right in front of me and I can't see the big picture environment. I'll take more trades that way, but a lot more of them will be losses. So good plan there on gold. Shall we wrap things up on the euro? Let's do this. Euro is bearish with a spike and range pattern telling me to look for selling opportunities using buyer failures up above the high of the range tomorrow. But more importantly, I need to avoid trying to sell below the lows because I can see that sellers have previously tried and failed 3 times so far today. So if price does push lower, remember I want to sell high here right now at resistance, but if price does push lower, I need to see strength first and then look for selling opportunities after a pullback on the way down to that measured move target waiting below. So relatively easy plan here on the euro. What do we know? We know we have a strong move down, right? Bears have control. What else do we know? We know that sellers are clearly having a difficult time making a new lower low, right? Big wicks, big reversals off that low. We also know the buyers gave it a really good shot, right? Strong move up. All the buyers needed right there was to hold that pullback, and all of a sudden, this is a bull market. But what happened? Yeah, they failed. That's a great example, right, of that failure, right? That W pattern we talk about every day in our trade room. Up, down, buyers buy it, and they got me again, right? Comes collapsing back down. This is why you don't buy in a bear market. It's highly unreliable. Yeah, there are going to be some times where you get lucky and you call a big reversal, but it's very difficult to get lucky every day. Eventually, the odds will catch up to you, just like sitting in a casino, right, pulling back the handle. You might get lucky a few pulls, and you might even make money in that day, right, but come back again the next day, and something tells me, right, the old MGM crew's going to get that money back, right, in their hands. So with that said, we know we have a trading range. It's a bear move into a trading range. This is where I'm looking for pretty much the same exact thing we just saw. I want to go up, let the buyers try to buy the pullback. If they fail, I want to sell right into their failure, right? Using what we call the 2-try rule. 1 try, pull back, 2 try, right, and then failure. You can see 1 try, pull back, 2 try, right, and then failure. The hard part is going to be, right, as we go lower. Because if you look at the bigger picture here on this, you'll notice now this was not it wasn't messing around. That was a pretty big move down, if you recall, right, to finish off last week's session, right? So, of course, that low, just shy of that 21,000 area, that low is the big target, right? That's where everybody wants to get to. So if we go lower here, yuck, I don't want to sell into that. Right, so this is a really difficult situation here if the market goes lower. So my plan is, if we see it go lower here, what I'm looking for is I want to see how they react to that low of day. I want to see how they react to possibly this little trend line I have drawn in here, because I have a funny feeling we might see something like I don't know, maybe a strong move down, a bounce, and then back up. And I can use that hidden channel now, 1 try, 2 try for failure back down again. So the moral of the story is you really got to be careful, selling down here, because it has the potential to really kind of kick back in your face. What I would love to see is a strong move through. We know the measured moves are trying to go, but rather than trying to sell there, mark up that prior swing, and we'll look for that sell at resistance. Remember, that's the key. And believe me, guys, I'm not going to sit here and say that's easy, right? As a human being, you and I, we are wired to be horrible traders. It's almost like we can't even resist ourselves. When the market moves lower on strength, it's like our hand just wants to hit the sell button. Believe me, I'm with you, right? I spent the first 3.5, almost 4 years of my career, right, many years ago, battling what is just instinct. It's instinct when the market moves lower like this for you to want to sell low, right? That fear of missing out, right? And it feels like you're never going to be able to get into this move. But sure enough, though, give it some time and it will come back to that level of resistance. And if it doesn't, if we go all the way down to that measured move in a straight stinking line, not to worry, most measured moves, and you'll see this in the free trading class in the upper right-hand corner, most measured moves will do what? It'll give you a two-legged reversal or two-legged pullback, a bounce. It won't reverse. It'll sink right back down again. So watch that secondary option if you don't get in on the way down to that measured move. I would rather take no trade at all than to take a trade knowing the probabilities weren't in my favor, and I hope you'll do the same thing tomorrow as well. Speaking of tomorrow, tomorrow is a brand new day and a brand new opportunity to learn the strategy, right, and come execute the plan with me in the trade room tomorrow morning. Right? Our beginner class is a great place for a brand new trader or even someone who's not a brand new trader but new to futures, or maybe you've come to read some of those old trading books. And those old trading books, they've got a bunch of outdated knowledge, right? That beginner course will help you set up your office, your computer, all your software. It'll talk about all the economic news that we use, and it most importantly will teach you about trading psychology. You know, being a successful trader, it's not about who has the fanciest computer. It's who can control their emotions, who has their mindset, right, in gear. And that's what our beginner class, it's all about technology and psychology. Our intermediate class, right, then teaches all of the technical analysis. A lot of the stuff that I talk about here tonight on the newsletter, but a much deeper dive. And then, of course, we take that technology, psychology, and analysis, and we wrap it all together with a strategy. I'm going to give you a copy of the entire trading plan, all the cheat sheets, all the checklists, all the indicators you need. I'm also going to wrap it all together with an unlimited membership to our trade room, which opens up every day. If you get any questions on that, or if you want a free pass, come on, join that trade room. Grab that free trial right on the homepage at schooloftrade.com, or grab that free trading course in the upper right-hand corner. And again, any questions, you can always hit me up on live support or drop the comments in the comment section for the YouTube video. Guys, I've taken up way too much of your valuable time. We're back here kicking butt. Another big week. Got a brand new month tomorrow and a brand new opportunity to change your life with day trading. Thank you so much for being here. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos.